Okay, hello and good morning everyone. Welcome to JFD Brokers Traders Espresso with me, Darius and Anucauskas. Today is the 13th of February 2019, so welcome everyone. Welcome to this Wednesday's morning session where we're going to have a look at the markets, a few charts, the usual stuff. But before we do that, let's quickly have a read through our risk disclaimer. So, the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. There's always a few seconds for you to read the rest and we can continue. Okay, so now then guys, let's quickly jump into the charts. Now the first one I want to touch on here is the FTSE100. Now I'm going to have a quick overview here, a few of these instruments that I've got lined up for us in this session, but I've touched on these a few times already recently, so just going to be a very quick overview on these. So basically, like I said, the first one is the FTSE100. Now looking at this daily chart, you can see that yesterday we had a nice positive move here higher, but it kind of got held here near this 200 EMA here, shown as the black line on the daily chart. So in a way, where we're gonna keep on monitoring right now, it would be, I would say, difficult to say that this is just going to continue traveling further up here. Of course, overall, yes, we are still somewhat more positive than negative, but again, for better confirmation of the upside, we would need to see a nice good break above this 7,190 level. This way, the path may be cleared towards slightly higher levels like the 7,245, or even actually better, the 7,330 level. Now this level in the past, you can see it acted as a nice good area of resistance here between the 7th of September and the 19th of September last year. So in a way, of course, keep your eyes on that one. Initially keep your eyes on the 7,190 level. Let's see if it breaks it or not. Of course, looking at the cash index right now, it seems the index continues to travel higher. It's currently slightly above the 200 EMA, but again, still below this 7,190 level. So for now, guys, let's see how this market is going to open up today. But again, like I said, if we get a nice push above this 7,190 level, yep, the next potential area of resistance could be seen near the 7,245. On the downside, well, I mean, I do have this level here at around 7,150, so also played out as a nice area of resistance, especially yesterday. But if we look at the 4-hour chart on this one, you can see how well it played out. And but for us, let's say, to get more comfortable with the downside, at least from the short-term perspective, we would need to see a nice good drop below the 7,065 level. This way, which is marked by the low of the 8th of February. This way we could then target these slightly lower levels, of course the psychological 7,000 area, or even actually going all the way lower, maybe testing this downside resistance line that, from above. So this downside resistance line has been running from the high of the 8th of August. We could in a way see a test of that, but again, in order to kind of see these like lower levels here, we need to see initially a drop below the 7,065, and then of course the psychological 7,000 level getting cleared as well. So for now, just continue monitoring this, but from the very short-term perspective, it seems to be more bullish than bearish. But again, like I said, let's see how it plays out near the 7,190 level. Jumping into gold, gold is pushing higher, trying to push higher, and if we look at the kind of slightly overall picture here, you can see that it's still trading above, not only above this medium-term upside support line taken from the low of the 16th of August, but also trading above the slightly steeper one taken from the low of the 14th of November. It kind of failed to drop a little bit lower here. You can see that yesterday it reversed higher. Today it's already trying to push higher. The only problem here is this little barrier that it needs to overcome. So in order for us, let's say, to get more comfortable with higher levels, we would need to see a nice good push above the 1316 level, and this way we could then target for higher levels. Of course, we will then target these recent highs near, or let's just say the high of January, this year's January, and that's around the 1326 level. So but initially we need to see a nice good pop above the 1316 level, and then we will target that higher area. If this suddenly decides to reverse and drops below, for example today it drops below the pivot, which is around the 1310, certainly that would increase the chances of maybe traveling further down here, maybe even actually going towards the psychological 1300 level. But of course, don't forget about this upside support line, this in a way of a short-term upside support line running from the lows of November last year. So this is something that could provide some support as well. But again, for now it is closer to the 1316 level. Let's see if it wants to break that or not. But again, like I said, if this suddenly reverses back down and drops below the pivot, now this is where you could potentially start looking at the psychological 1300, maybe just slightly above that, the 1303, something like that. But again, still around that area. Yep, it could be a nice good potential test of the psychological 1300 again. Jumping into another commodity, which is the WTI, and looking at this 4-hour chart, yesterday we had a nice push higher, but kind of failed to drive above this key area of resistance around the 54.20. Now I was covering this one, I was telling you guys to keep a close eye on this 54.20. Now if this continues to travel further today, and it has a good chance as well, because for now of course it's still trading above the pivot, today's pivot, so it's slightly a more positive look on this. But if, like I said, for a better confirmation of the higher levels, we need to see a nice good push above the 54.20, and then we will target like areas like the 55.20 or even the 55.70 mark near the highs of the 4th of February. Let me just quickly put an arrow here for our future reference, guys, and this is what I'm talking about basically. So yep, keep your eyes on this level right here. For now we're more in the neutral spot here. We're just going to continue observing it, because if this suddenly decides to reverse and drops below the pivot, certainly what we're going to wait for here is a break below the 53 level. Now if this happens, if we see a drop below the 53 level, now this is where it could turn out to be a little bit more on the ugly side for the bulls, and we can see maybe more bears jumping in here and potentially leading this commodity towards a retest of the 51.30 level approximately there, guys. You can see that how well that played out recently here in the past, so like especially on the 11th of February and also on the 28th of January. So this is quite an important level here, the 51.30, but again we need to see a nice good drop below the 53 zone first. Jumping into AUDNZD now, I was talking about this one in my yesterday's traders tea time. Basically, of course, as you probably are aware, we overnight we got the RBNZ interest rate decision, and also the RBNZ rate statement. So in a way, investors kind of picked up on New Zealand dollar and kind of started buying it heavily, and you can see this is what happened with the AUDNZD. We saw this dropping from this level here that I was telling you to keep an eye, keep a close eye on, the 1.0530. Initially kind of had a nice push higher, but quickly reversed, dropped back down towards the 1.0440 and actually broke below the 1.0430, where it managed to reach this 1.04 level. So I was also talking about that one, guys, in my traders tea time. and basically this is where it found very good support, from which it reversed higher, and now it's still currently trading below the 1.0430. Certainly the downside pressure remains on this pair, but again, given the fact that in a very short period of time it kind of sold off very quickly like that, we might see maybe a bit of a correction back up here. But as long as it stays below the 1.0475 area right here, we might see another leg of selling, at least back down towards the 1.04 level. So in a way, if we put an arrow, we could see something like this, guys. So basically for now, be very careful. Be very careful with this pair. It's a bit of a tricky one. It's kind of currently, let's say, in a sideways trading activity. So also just to kind of mention this, it's still below this downside resistance line here, taken from the high of the 9th of August. So that's also kind of putting a bit of downside pressure on it. But again, let's see how this plays out today. Keep an eye on some key levels, because just from this picture it would be difficult to say which exactly direction it wants to continue traveling. So that's why we're going to keep an eye on some key areas here, key support and resistance areas, of which we will wait for, or should I say, a break of which we will wait for. And if this decides to drop below the 1.04 level, certainly keep a close eye on slightly lower levels like the 1.0370, or even actually a little bit lower. But for now guys, we could see maybe a little bit of a retracement back up here. But again, if it fails to drive above the 1.0475, then, or maybe get stuck somewhere around this area, then we could see maybe another leg of selling. Jumping into GBP yen, now I was talking about this one yesterday as well, and I was telling you guys to keep a close eye on this little range. Now let me just zoom in here a little bit. Bear with me one moment. So there we go. Just let me just So now then, basically I was talking about this one, and also in my yesterday's Traders Tea Time, and I was telling you guys to keep a close eye on this little range that we had between the 141.72 on the downside and the 142.50 on the upside. So we can see that we had a nice push higher, broke some this key resistance area, and continued to push further up here. Now currently the pair is stuck around this 142.85 level, approximately there. It was marked by the intraday swing high here of the 1st of February. Certainly does have some potential to travel further up here, especially towards this R2 of today's R2, which is around the 143.15, and also you can see that how well it acted as a good area of support back here, back on the 1st of February. It was the intraday swing low of the 1st of February, and then also kind of continued to hold the rate from dropping lower up until the 4th of February. And yep, on the 5th of February we saw this break lower. So in a way, that's what I'm saying, guys. This key area of previous support could act now as a good area of resistance. So 143.15, that's the level that we're keeping a close eye on right now. In case this decides to reverse strongly back down and drops below the 142.50 level, well, this is where you should probably take the more of a cautious approach, and it could increase the chances of seeing this pair sliding further down, maybe actually going back all the way towards the 141.72. But for now, it doesn't seem to be the case. Now, looking at the euro dollar, now this one is well, should I say, a little bit crazy, I would say, because it's a bit difficult lately to trade the euro dollar, because it does give some good signals, initial signals, technical signals of, let's say, that, for example, we did have a nice drop here below the 1.1290 level, from which it kind of traveled further down, managed to reach this other key strong area of support at 112.70. But kind of slightly failed, well, broke it, but kind of failed to travel further down towards this key area of support near the 1.1215. You can see that yesterday it reversed sharply back above this upside support line, one of the upside support lines here, which connects the low of the 12th of November and the low of the 24th of January. So currently it's kind of getting held by this 113.30 level, so quite an important one. And if we jump into a 4-hour chart, this is how we could, in a way, look at this today. Basically, you can see that currently the pair is trying to retrace a little bit lower. The only thing is that, yes, if it continues to travel a little bit lower, it does have this upside support line for a potential bounce here. But if, of course, if it drops below this, then yep, we will start targeting these lower areas again, like the 112.90 or the 112.70. But if this decides to rebound, and we could see maybe another push higher here, a test of this first initial, this tentative upside support line that I was talking about, like for quite a while, for over past probably 2-3 weeks now. This upside support line, we're still keeping it on our radars, as it still kind of acts as a good gauge here to see how the pair is performing. In a way, we could see a test of that line from underneath, but of course, for us to get more comfortable with the upside, we need to see a nice good pop above the 114 level. So a nice good move above the 1.14 could open the path towards higher levels. But for now, until it's kind of trading below this upside support line, we're still gonna remain somewhat bearish, I would say, on the whole outlook, at least for near-term outlook. But again, in order to kind of consider further declines, we need to see now a few good breaks of some of the key support areas first, and then we'll aim for lower levels. So for now, guys, long story short, even if we could see another push higher, keep an eye on this upside support line. If it continues to hold, this is where maybe the bears could step in again and drive this pair lower. But if the rate travels above the 1.14 level, now this is where it could the bulls could get more excited again. And the last pair I want to quickly touch on, not going to spend too much time on it, that's Nzd Jpy. So as I said previously, we did have some news coming out of New Zealand, and you can see that how investors jumped in on this pair here, and in general on the New Zealand dollar, and the pair managed to retrace almost all of the losses, regain all of the losses made last week, and now it's kind of testing this key area of resistance. Well, actually, it's not far from that area of resistance, near the 75.85 level. So if this decides to push above that, yes, we will start targeting slightly higher levels, like the 76.65 area, approximately there, marked near the lows of the 17th of December, or even higher. But for now, the big question here is, are we going to get a nice pop here above the 75.85 or not? If this continues to hold, if this decides to drop lower here, to be honest, there is a good chance we could see maybe a bit of a correction here back down, because looking at these pivots today here, pivot lines, you can see that we're well above the R3 already. So in a way, we could see maybe a slide back down, and if this decides to drop below the 75.50, certainly this is where we will target the 75.15 level, or even actually going all the way back down towards the R3, which is around the 74.95 level, so just slightly below the psychological 75 level. So keep your eyes on down. But for now, like I said, you can see that it is quite overextended here on today, so we might see a bit of a correction back down before maybe another leg of buying. But again, that's only the case if we remain above the 75 zone. So keep your eyes on down. Okay, guys, thank you very much for watching and listening, and thank you very much for sticking around a little bit. I've went over my time right now, but I hope you found it useful. And if you want to join me later on in my Traders Tea Time, and that's 14:15 GMT time. But for now, have a wonderful trading day, guys. Bye bye.